Welcome back to BlockTV. I'm Ron Friedman, and it's time for Bitcoin Brief, where we break down the top stories related to Bitcoin. And today we're delighted to be joined one of the most prolific writers on the scene, Bitcoin Magazine's Colin Harper. Colin, joining us from Nashville today. Thanks so much for being here.
Always happy to be here, Ron. Thanks for having me.
All right, so it's been a big week for anybody in the crypto sphere, but definitely anybody who's writing and reporting on Bitcoin. You chose some of the stories. We'll go through them one by one. First off, and this is what we started the week with, is Bakkt. Remember that? So they after a year or more of anticipation, it finally launched. And Colin, I have to say, underwhelmed?
Yeah, so like you said, Bakkt is backed and it finally launched. So we got 29 contracts in the first 12 hours. The first 24 hours, I think it ended up being 71 contracts. One contract equals 1 Bitcoin traded on the exchange. And so that's just before Bitcoin really took a nosedive. That was in the ballpark of $700,000 worth of contracts. For some perspective, when the CBOE and CME exchanges in Chicago launched their first cash-settled Bitcoin futures back in 2017. That's a good, important distinction. Theirs were cash-settled, Bakkt is physically settled. But they launched with 70 million and 100 million on the first day of trading. So in terms of how we stack that up against Bakkt, Bakkt's not looking so hot from its first day. From his first day trading. I'm going to do a kind of retrospective article will be published on Monday, kind of looking back at the first week, and also looking at expectations, looking at reactions about what we saw. I definitely think it performed lukewarm, to say the least. And I think a lot of people were a little bit surprised and disappointed at this. Yeah. But there have also been takes that say, it's a trickle, not a flood, right? We gotta wait for institutions to kind of feel more comfortable with this. The options out there, if you build it, they'll come. Yeah. I'm of the mindset that it's too early to say, obviously, whether or not Bakkt was a flop.
Right. Let's be fair. Although, I mean, when you put it in perspective with the numbers that CME and CBOE were trading at, that's a huge gap. And when you're talking about the type of hype that was around this Bakkt launch, people have been talking about it for a year, if not more. I'd say disappointment might even be an understatement.
Yeah, and I think that you really nailed it there too, especially Bakkt has been trumpeted for the last year as basically breaking the levee for institutional money, right? You're going to get this flood of fresh capital into the ecosystem. Because now institutions are going to have a way to buy Bitcoin, right? Right. Well, that's not really the case, because institutions already have plenty of options. This is something that I've written about in the past. You've got Fidelity, you've got Grayscale. You've got the CME and CBOE futures, which again aren't direct exposure, but it's still investment exposure. So institutions have their ways in. This is just another vehicle to get them on the road with Bitcoin. Again, I think we'll have to wait to see. But I will say, I think that, like you said, disappointment might be an understatement. I don't think anyone last year would have laughed if you said, yeah, Bakkt's only going to trade under $1 million worth of Bitcoin in the first 24 hours. I don't think anyone would have seen that coming.
I'll even take you a step further, and we heard more than one person talking to us over the last couple of days, and said that this latest drop in the price of Bitcoin could be attributed to the disappointment from Bakkt. And what do you think?
I think that's definitely more realistic than some people have said, well, maybe Bakkt crashed the market. It's no, only 700,000. Worth of Bitcoin was traded in the first 24 hours. That's not nearly enough to move the market. As for whether or not this tanked the market, it's hard to say. I don't know why the market does what it does. It responds to some news favorably or disfavorably, and other news, more favorably. But that could be a factor. I'm of the mindset that we were tightly wound for a while, and the market was looking to make a move, and there just was not enough buying interest. So maybe that's wrapped into this, but you know, I think we were kind of poised for a move downward, with or without BACT.
All right. Anyways, like you said, I'm eager to read your piece that comes out on Monday. A retrospective, very educational, and maybe put things in better perspective. Let's move on, though. Your next story also related to the crash, obviously, but this time we're talking about the hash rate, which coincided with the price crash, but for different reasons altogether.
Right. So you know, the hash rate dipped like 30 to 40% about noon, I think. 2 days ago, right before the price really took a dive, and a lot of people, you know, made kind of these, drew links. There's a correlation. It's like, oh, the miners are turning off their rigs, things like that. Well, what really was going on there? A lot of smart people, a lot of smart technical people on Twitter, like Jameson Lopp, Nick Carter also commented on this. As well as CoinShares head of market, head of research. And basically, so what people have to understand about the hash rate is the hash rate is an approximation, not an absolute value, or what, you know, when you see charts of Bitcoin hash rate, right? And the reason that is because the only way for us to really estimate hash rate on the network is to take the difficulty at the time of when you're measuring the hash rate. So whatever the difficulty is of the Bitcoin network to find blocks. And then you factor that into an equation based on how long the block intervals are, right? So usually this is on average 10 minutes. But you know, the Bitcoin network has a lot of variables, and this block time can be as short as a minute, or it can be as long as 20 minutes. I mean, we've seen hour block times before as well. So what happened the other day was the block times were spiking. We had a few that were well over 10 minutes. So these estimates for the hash rate then, you know, reacted and dipped, because after they took the block time in conjunction with the difficulty, these estimates assumed that fewer miners were on the network. But as you saw the next day, it recovered and went back to normal. So the hash rate, Bitmain's not unplugging its devices. None of the big pools.
No huge flooding in China that's driving people up.
Yeah, no, absolutely not. Nothing like that. Yeah, this is just it's just the way Bitcoin network functions. And if anyone's interested in learning more about it, definitely recommend looking at what Nick Carter and Jameson Lopp have tweeted about it. Also, CoinShares has a great blog post about just why the mechanism worked the way it did.
Interesting, because in that case, maybe it should be surprising that we're not seeing those kind of fluctuations in hash rate more often. But
right.
worth educating ourselves.
Yeah, right. And sometimes, they do happen, semi-frequently. Now, the one that we saw yesterday, 30 to 40%, yeah, that is a statistical anomaly. And I think that's why people jumped on it so much.
All right, and for your last story for today, we're back to a price, and your headline: Bitcoin price analysis, macro support gives way during strong sell-off. So yeah, we know the technical analytics here, but break it down for us. How where is support right now?
Yeah, so a lot of traders are signaling for support in the 7K range. A lot of people think that we've still got a step down to go. I'm I don't do TA. I'm not a trader, but I will say, we had a very violent move downwards. Typically, when we have violent moves downwards like this, the market does one or two things. It either reacts immediately with a pump back up to former levels, which is usually what happens when we're trending in a channel, or it establishes some sort of support and then goes sideways for a little bit longer and then decides what it wants to do, or it just continues going downward. I'm of the mindset that I don't think we've probably seen the last bits of whatever this sell-off is. I think this is a reaction to some very strong upward movements. Again, this past spring in 2019, I mean, we went on an absolute tear there for a while, and the exuberance was almost like that of 2017. You know, people were going nuts, calling for a new bull market. So I think this definitely caught some people by surprise. I think most people probably thought that 10K was an established support and that we were going to keep climbing from there. That just goes to show, you know, this is still a very volatile asset, still a very, very volatile market. And, you know, you just never know what Bitcoin's going to do one day to the next.
And which you got to say is that it's one of the main problems there, especially if you're looking for, you know, taking us back to BACT and the desire for institutional investment and mainstream retail investment. This volatility is not helping anybody except for the short sellers.
No, especially not for, I think, some like retail investors. So I always tell people, it depends on your risk appetite, right? Like I'm young, I'm dumb, so I'm willing to like throw some money into Bitcoin because I've got, God willing, the rest of my life ahead of me, and you know, I don't have as much to lose. I don't have a family. I'm not saddled with you know, any sort of mortgage or any outsized debt. But you know, like you said, for the average retail investor, they look at an asset and it loses 20% over the course of a week. Well, that's dangerous to people who are looking to grow their wealth. Of course, you know, you have to look at the other picture too, right? Where Bitcoin is still up, you know, nearly 100% more over the course of the year. It's all about where you buy in. This is why we always urge dollar cost averaging. But this is another problem with why an ETF is having so much trouble, right? I mean, the SEC sees movements like this, and that doesn't make them comfortable. They don't think that this should be something that regulated and accredited investors have too much exposure to. So, you know, we've still got a long way to go before this volatility is tamed. But, you know, more market participants means more liquidity, means hopefully more stability on the upside as we continue to grow as an ecosystem and as Bitcoin continues to grow as a burgeoning asset class.
All right, and what's your take when it comes to you know, kind of looking ahead? We've got, you know, kind of checked, backed off the list. That's gone. Is the Bitcoin ETF the next you know, holy grail for investors?
I think that's definitely the next big you know, investment product for Bitcoin, right? I mean, we already have futures. We've already got. I mean, I don't think people truly appreciate actually how many institutional offerings there are for Bitcoin. You know, we've got things as complex as call options for things like Ledger X, which are another form of derivative that are futures-like, but they give an investor the ability to opt out of whether or not they want to buy an asset at maturity, and they pay a premium for this privilege. But so we've got a lot of institutional offerings, and I definitely think the ETF is the next one. Whether or not it'll be the crowning jewel, you know, let's see, because everyone thought that about BACT. But as we see, BACT did not perform as well as people hoped it did the first week that it was launched on ICE.
All right, maybe everybody could use some R&R trading sideways for a bit and let us catch our breath. Colin Harper, Bitcoin Magazine, it's always a pleasure. Thanks for joining us, and we'll talk again soon. Those of you watching at home, don't go anywhere. We'll be right back with more blockchain and cryptocurrency news.
For more news and updates, follow us on Twitter